Hello friends, I am Mayank Mohanka, partner in Messrs SM Mohanka and Associates and founder director in TaxAaram India Pvt Ltd. In this byte, I am making an honest and sincere attempt to explain all the budget amendments proposed in the Finance Bill 2022 in relation to the TDS provisions. Friends, in the Finance Bill 2022, an altogether new section 194R has been proposed, and this new section 194R provides that TDS has to be deducted at the rate of 10% on any benefit or perquisite arising out of any business or profession on incomes in the nature falling under section 28 clause 4 of the Income Tax Act. Friends, incomes falling under section 28 clause 4 are taxable as business receipts in the hand of the assessee. Now, this TDS provision, corresponding TDS provision under section 194R has also been brought about to catch the footprints of such income. Friends, firstly, we should understand that although the nomenclature or terminology perquisite has been used in section 194R, but this perquisite is different from perquisite under section 17(2), that is under the salary income, because for perquisites under section 17(2), already TDS is required to be deducted under section 192. This section 194 only talks about a benefit or perquisite in the nature of income under section 28 clause 4. Friends, let us understand this with the help of an example. Suppose Mr. X is a trader, he is a businessman, and he sells his goods to Mr. Y, who is a customer, and he sells his goods to Mr. Y at some discounted price, and he is receiving his consideration at a discounted price. But in lieu of this discount, Mr. Y has gifted a car to Mr. X. So in such kind of cases, it can be held that this car is nothing but a kind of circumvention of the income or the normal or regular price of the sold goods. So in lieu of the discounted price, the customer has paid Mr. X in kind. So such kind of transactions are considered as business income in section 28 clause 4. So in our example, Mr. Y, that is who is gifting the car to Mr. X, will now be required to deduct TDS on the value of this car with effect from 1st of July 2022. Friends, the threshold limit of 20,000 has been prescribed, meaning thereby that if the aggregate value of such benefit or perquisite in a financial year is in excess of rupees 20,000, then TDS under section 194R is required to be deducted at the rate of 10%. So this was all about 194R. Friends, here I would like to discuss the judgment of Honorable Supreme Court in the case of Mahindra and Mahindra. In this judgment, the Honorable Supreme Court has held that only incomes which are in terms of either in kind or partly in cash or in kind can be considered as benefit or perquisite under section 28 clause 4. If such benefit or perquisite is entirely paid in monetary terms or in pure money terms, then this benefit or perquisite cannot be taxed under section 28 clause 4. So in my humble understanding, the same ratio should also be applicable in case of this TDS provision, that if the benefit or perquisite is entirely paid in monetary terms, then there should not be any requirement of deduction of TDS under section 194R. This is my personal understanding. Friends, now coming to another very important new section, TDS section 194S, which has been brought about by the Finance Bill with effect from 1st of July 2022. 194S talks about requirement of deduction of TDS at the rate of 1% on purchase of virtual digital assets. Well, yes, friends, with effect from 1st of April 2022, the Finance Bill 2022 has proposed to insert a new section 115 BBH, which provides for taxation of transfer of virtual digital assets at the flat rate of 30% plus applicable surcharge and education cess without any benefit of losses offset or any other deduction. So correspondingly, a TDS provision has also been inserted similar to the provision under section 194 IA in respect of TDS on purchase of immovable property. Similarly, TDS at the rate of 1% is now required to be deducted on any purchase of virtual digital asset including cryptocurrencies and non-fungible tokens with effect from 1st of July 2022. However, two threshold limits have been prescribed, and these are 50,000 purchase of virtual digital asset in excess of 50,000 for specified persons, and purchase of virtual digital assets in excess of 10,000 for persons other than specified persons. And who are specified persons? Specified persons are, number one, those persons showing their income under other four heads other than the business or profession head, and secondly, persons showing their their income under the head business or profession, but their business receipts are not in excess of 1 crore or their professional receipts are not in excess of 50 lakhs. So those persons are also covered as specified persons. And for specified persons, a higher threshold purchase limit of 50,000 has been prescribed, and for persons other than specified persons, a lower threshold limit of 10,000 of purchase of virtual digital assets has been prescribed. So this was about 194S on TDS on purchase of cryptocurrencies or virtual digital assets. Friends, thirdly, we all know that Finance Act 2021 has inserted a new section 206AB providing for deduction of TDS at higher rate, that is twice the applicable rate, or 5% in case of 194C, if the deductee has not furnished his return of income for the immediately two preceding financial years uh, or before the after the expiry of the 139(1), and the amount of TDS in each of the two financial years is in excess of rupees 50,000. Now, Finance Bill 2022 has proposed to reduce this time period of two financial years to 1 year, meaning thereby that now the deductor will be required to deduct TDS at a higher rate of twice the applicable rate, or 5% in case of 194C, if the deductee has not furnished his return of income in the immediately preceding financial year and the amount of TDS in that year is in excess of rupees 50,000 or equivalent to 50,000. So in a way, the coverage and scope of 206AB has also been enhanced by the legislature. Friends, I always believe that already chapter 17B has been inserted by the legislature, and by doing so, the onus of tax collection has been passed on by the legislature to the taxpayers. And now, by virtue of this 206AB, and now further reducing further enlarging the scope of this 206AB by reducing the time period by 1 year, the onus of verifying the tax filing discipline of the deductee has also been placed upon the deductor. So compliance burden has increased. So friends, I hope this byte you will find it useful, and do take care of your health. Thank you. Goodbye.